In this segment, we are going to look at the end of period adjustments for unearned revenues. Recall that at the end of every accounting period, there are 4 types of adjustments that need to be made to the accounts in the general ledger. Let's look at the adjustments for unearned revenues, which are liabilities that are no longer owed. For example, on October 1st of 2019, ABC University sold 1,000 season tickets to its 20 home basketball games for $100 apiece. When those tickets were sold, the company did not record revenues because revenues are not recorded until they are earned. Instead, they recorded an unearned revenue, which is a liability. So when that was received, they would have debited cash for the cash received and credited their liability unearned revenue. So between October 1st and the end of the accounting period, they've been carrying a liability of $100,000 in the general ledger. It is now December 31st of 2019. ABC University has played half of the games for which the tickets had previously sold. This means that half of the unearned revenue liability is no longer owed. Essentially, it was paid off. The liability was paid off, earning the revenues. So as half of the games were played, half of that liability was paid off, and half of it was earned as a revenue. So the adjusting entry at the end of 2019 would be to decrease the liability by half, or $50,000, and record that $50,000 as a revenue. So we debit the unearned revenue liability account and credit the revenue account. That leaves a $50,000 liability in the general ledger, reflecting the fact that they still have half a season that fans have already paid for the games.